What's up, Santiment? I hope we're all doing well. It is June 24th. As we round out the end of June, things are starting to look a lot better for prices. And we're going to touch on quite a bit today, on-chain social metrics, many of the anomalies that are showing up on the whale side, and try to see what are the encouraging signs that might be backing up this rally. It may not seem like we have this much sea of green going on, but the reality is things are looking pretty nice in terms of price recoveries right now, with some assets actually showing plus 40% or more over the past week. And this is a welcome sight. Obviously, we've been in a 7-month bear market, 7+ months, and Bitcoin is up 3% over the past week, Ethereum up 12.5%. And there are a lot of reasons why we can see this happening. Before I jump into what those reasons are, I want to remind everyone we are not an investment advice channel. We are simply reporting the data based on historical divergences that we've seen in our data to give you a picture of exactly what has happened in previous cycles when similar patterns have arisen. So keep that in mind. So that said, check out our social volume bar here in the middle. So this is the actual increase over the past 7 days or decrease over the past 7 days in terms of the amount of discussion related to an asset and most of them are still actually quite down. You know, we had a lot of news with Solana, so that was up. Binance Coin is seeing a big uptick, and XRP had a big rally just in the past 24 hours. So I can see why those are up. Ethereum, though, despite being up 13%, is being talked about 20.5% less than last week. So this is actually kind of a good sign. It means that at least for a lot of these assets, I'd say a little more than half, maybe right around half, are in red territory. That means they're actually losing discussion volume compared to last week, despite these price rises going on. So there's either a lot of disbelief or it's being ignored because prices are still so suppressed. If I go to 30 days, it should look a little more bleak. And you can see that just, you know, if we go back to last May 24th up until now, it's not looking nearly as good. So this could be a reason why a shorter term rally like this isn't getting as much traction as we might expect. Prices are still down, traders are still way underwater. So even seeing 20, 30, 40, 50% plus rises isn't enough yet to move the needle. And that's pretty shocking. And honestly, in terms of alpha, it probably works in bulls' favor. You don't want to see the crowd suddenly getting overly excited about a small or mid-sized or even large uptick, depending on which asset you're looking at here, because they can bring the rally to a halt by putting their FOMO in and kind of having the whales or larger addresses second guess how much they want to push this rally up just yet. So it's a quiet recovery, and those are usually the best kinds. By the way, is Maxim here with us yet, or is he going to be joining at all?
Yes.
Oh, hello.
Yeah. Hi, Brian.
Yeah, great to have you. I'm curious what your take is on the past week and what we've seen.
The best I've seen is there is indeed now a wall of wars are concerned. So this is what you want to see if you want price to keep growing. And we have enough. We have enough with all these microeconomical issues or issues stays and will stay. I mean, attitude of market participants. It will get worse. Inflation will continue. Fed will have to react. Actually, we'll see if we get to it. The charts for inflation says a bit different story. And it's I like the setup. They're not so often. When crowd was resistant very long time, now they get into the negative mood and they stay with it even though the situation actually changed. So yes, there are quite some. Not everything is perfect, as we discussed last week. There are a few pieces which I personally still missing to get full in, like this accumulation of USDT dolphins, as we call it. They're not increasing stablecoin positions. I would like to see it, but founding rates went negative enough. So people were shorting and still not longing. No new debt is being created on decentralized protocols, which is also good. So it's a mixed picture with, for my taste, positive bias. Positive for the growth, yes. And whenever I say positive for the growing, it means I see enough negative signs. So for everyone who is listening, or I read sometimes comment. People say, not so easy to follow what I mean. It's always like trying to catch crowd consensus. Means majority of participants agree on something, and then you act against it. So it's a simple concept, but once you start talking about and discussing, showing metrics, they look bad, but it means it's good. This kind of setup. Need to get used to it.
Yeah, I can't tell you, Max, how many times I've seen people mention the recession, just in terms of the S&P 500. And honestly, if it was that easy and we had just a very implied recession where, you know, for the next 1.3 years, we're going to see a very stark downturn in the stocks, then everyone would be shorting the stock market right now. And the reality is there's never a clear sign, just like there wasn't back in March 2020, where everyone just assumed COVID was going to tank the markets indefinitely after we saw that initial drop and then kind of a 1 to 1.5 week slide for all markets, everyone just presumed that was it. And it turned out to be that week after Black Thursday, even maybe slightly under a week, that was the beginning of the bull market. And people were in just disbelief for like the first few months of it. It's hard to compare that to this, but it's, with inflation and so many worries happening, just remember that it's not as uniform as it may seem when you see nothing but recession comments all over Twitter.
Yeah, exactly the point. It's very challenging for both mind and your emotional part of your personality to actually deal with crypto market, with any market. Things are changing and market reacts or moves most of the time not where your mind telling you has to move. There are periods of time when everything aligns, everyone agrees, everything's bad and it moves down, or everything good and moves up, but it's a short period of time. There are much longer periods of time where it's irrational. And we find historical explanations, but after things happen. So whenever we approach the market, if we really want to do it professionally in the sense be successful over a long time, just need to accept it. It's challenging. It's difficult for brain, for rationality of our brain, and it's difficult for our emotional part. And there is nothing we can do about it. So you just need to accept it and approach accordingly. Yeah? So look where we have internal resistance, or where we convinced something will happen, but maybe exactly this point will not happen. But let's continue. Data pieces, they reveal this data points. Just keep in mind the way I personalize, and I think Ryan to a big degree, maybe less than me, but to a big degree, it's trying to understand feelings of group of participants. Ideally, find consensus, what most people agree on. And if we cannot find it, at least how big token holders behave, what they're doing, what they're saying. Yeah? Actually, what they're saying is more like for the crowd. Trying to get as much as possible how they behave and why, what they feel.
Yeah.
And then you can act accordingly.
So why don't we take a quick look at the last 3 months of Bitcoin versus the S&P versus gold, and then we'll look at a few of the social terms that Maxim is mentioning right now, so we can see where the rise in social volume is happening. So first things first, here's a quick look at Bitcoin here in green, the S&P in teal, and then the gold is in gold. You can see that there's been a rebound in the S&P. Going back to the beginning of the week or so, Bitcoin was actually diverging downward for a bit, which is interesting. Just out of curiosity, I'm going to switch to Ethereum here, because I think Ethereum's actually followed a little closer, which is sometimes the case. Yeah, sort of. I mean, it's relatively the same as Bitcoin right now, but you can see that both have been rising pretty much since Wednesday. And gold has been a little bit flat ever since the end of last week. But, all things considered, if you start to see a lot of bulls celebrating, saying like, told you so, bears, that was the bottom, be wary, because it doesn't necessarily mean that we hit our bottom here, especially as we look at some other metrics, and we may see whales aren't yet accumulating. In fact, some are actually showing some dumping signs still. Daily active addresses need some improvement, things like that. But for now, yes, we officially had a local bottom, at least on June 18th, about what was that, last Saturday, before we were able to begin rising, and the S&P being able to recover a little bit despite the economic easing from the Fed is a promising sign. And it kind of reminds me a bit of what happened in March. Just before here, I'll go to the last 6 months instead, so you can see what happened in March on that first Fed interest rate rise, which was only a 0.25% rise as opposed to 0.75%, which happened just a couple of weeks ago. So here in March, this is when the Fed made that first rise, and we got, I think it was right here or so, and we saw an initial dump followed by flatness, and then takeoff, right? And that takeoff went for about 10 days or so, week and a half. And then it started to drop down as people worried about the next one. And then on the next one, which happened around here, we saw a very short-term rise and then absolute plummet because a lot of people were expecting it to repeat exactly what happened in March, and instead the opposite came true. So then when this one happened, I think it was, I can't remember the exact date, something like 2 weeks ago, we had kind of flatness. People were expecting it to follow what happened last time, which was a dump, and we saw an initial dump, and now it's rising. So it's doing more of what March was doing. And there's no way we can predict whether it will do that 10 to 12 day rise like we saw back in mid-March, but it's at least a strong start and an encouraging sign that rebounds can happen and kind of silence the bears for a little while. I wouldn't say they're silenced by any means, but it's certainly a promising sign that we're moving in the right direction right now. And while we're looking at, you know, where people's money is going and whether it's where their mouth is, we can check out the funding rate model and see that there's a very slight rise in both Bitcoin and altcoin longing right now, but altcoins are still in the short range, and Bitcoin is pretty much right at neutral right now. After altcoins have been basically in shorting range for most of the past week, just slightly right around here. This is just the past 48 hours, but the purple line has consistently been just slightly in green, whereas Bitcoin has been a little more indecisive, more so in the green side than the red side, but not to an extreme degree either direction. So if this rally continues, expect that this funding rate will start to go into positive range, which is not what we want to see. We want to see people in disbelief over this rally. And it's self-fulfilling, as it usually is in crypto, where the markets are going to go where the crowd least expects it to. And the whales tend to pump up prices when the crowd is not expecting, and they tend to dump when the crowd is getting in full FOMO mode. So right now, in terms of where people are actually betting with their hard-earned money, it's still slightly short on the altcoins and neutral on Bitcoin. Now going over to, actually, no, I promised we would look at social trends next, so let me do that. I forgot where do you remember where the social trends button was rearranged to? Because I usually use a bookmark here, Maxim or Max.
I use top right, this, yes, and then tools or labs, yeah.
Still not seeing it. Labs, thank you. Got it. Thank you. Okay, so our sand trends countdown here, it's not showing too much related to direct crypto assets other than Solana, which has been getting kind of laughed at as of late. I've seen more negative commentary towards Solana than positive. I'm curious how the social volume has been. Yeah, so there's been a huge spike. I don't recall exactly what like the memes have been about, but I've seen a lot of them popping up on social media throughout the week, and it is causing a lot of big spikes. If we switch to SOL here, we can see that the price has been rising like most of crypto over the past week, and social volume doesn't look like it's slowing down. It's staying pretty high after being quite low over the past 3 months. We switched to the year perspective to give even more context. And yeah, I mean, we're seeing the biggest spikes since November, really, if not this one in early December. And until that changes, expect Solana to have some increased volatility at the moment. And likely, if the perception of it is negative, expect that will be good for the price rather than not so good. And we see most of it's happening on Reddit and Twitter, not much on Telegram at all, interestingly. Now, another thing we can look at is the buy the dip mentions. And it does appear that they are declining right now. They are still high compared to what we were seeing in May when things were flat. And even during the long gradual dip from late March all the way up until early May, there wasn't nearly as much by the dip mentioning as we saw throughout mid to late June here. It kind of picked up a little in late April and then exploded on the huge dip in the second week of May. So that's something to keep in mind as well. We want to see very few people interested in buying the dip. Obviously, you'll see the most spikes when there's an actual dip happening, and because prices have been rising, that would explain it. But long term, right, we're obviously still on a huge dip here. And if we go to the last year, I mean, this is what we would call a dip. So whether people are talking about a single day or 1 week dip, the reality is we're on a 7-month dip going back to mid-November when we had our all-time highs. Everything since is technically a dip, and it's really all about relativity when it comes to that. Most of the mentioning of by the dip still is happening on Twitter, very little on Reddit, and almost nothing on Telegram right now. So that's quite interesting. Telegram overall is staying very suppressed. In fact, what we can do here is type in the asterisk sign, and this is going to bring up all social volume on all platforms. So we saw a peak of it in late April, and it's been sliding down a bit ever since. And I would call this a good thing overall. I think that as volume is declining, as price declines, this is a sign that a lot of weak hands are simply jumping out of crypto because they just don't believe it. You know, there was a big Reddit thread, I think around the beginning of the week, of covering whether crypto in general is a Ponzi scheme. So before I do that, let me just look to see where, yeah, social volume is pretty much down everywhere on each platform. Twitter's stayed the most stable. But if we look up Ponzi, and I haven't done this before the call, but I would bet that it would be pretty high on Reddit right now. Yeah, so check that out. There was a big mention of Ponzi scheme in mid-May. That didn't hurt the price. And then when it died down, that's when the slide happened. And now there's another speculative spike about whether crypto is a Ponzi scheme. And price is actually moving up. So that's a great example of how the crowd is usually wrong. If they are speculating that prices are going to go down, it usually does the opposite. So yeah, I mean, huge explosion here. I think it was just off of like an initial Reddit thread that happened like 5 weeks ago, and there have been more discussions about it ever since. And then we can also look up like bear market, or actually we'll keep them separate. So bear market, enter, and then bull market, enter. And we should be able to compare the two. If we go to shared axis, that gives us some context on how close they are together. We can see that bear market is still dominating right now, which is quite interesting. Very few people think that we're in anywhere close to a bull market, and that's to be expected. You can even look at social dominance for these and see how they've actually compared versus all other keywords at the same time. May take just a moment here. So yeah, we had a huge bear market mention, and this happened, what, 5 days before the actual bottom, local bottom at least. So that's pretty telling as well. Right when people say, yep, we're officially in a bear market, we suddenly are showing some signs of getting out of it. And this is a very small sign, mind you. This is look at the price context here with just the small rebound versus where we were back in November. There's a very long way to go, but it's still a promising sign. And I'd encourage you guys to check out whether negative sentiment terms continue to dominate because it's going to be a sign that prices are prone to recover. And if the negativity starts going away and we go into positive territory, be a little more concerned that the rally may be coming to a halt. Anything else on social trends you wanted to mention, Maxim?
The thing is, here is a little bit noisy outside. I think they're training some airplanes.
Of course they are.
Yeah. But no, you covered good. Just to keep in mind, I think in Telegram there were some changes they did lately on API. I think we cannot collect all the data as before. So it's proportionally decreased a little bit.
Yeah,
this could be one of the contributing factors to why you see less.
Great point. Great point.
Mm-hmm. Yeah. No, it's good.
Right.
I mean, social is one of the key things we always like to observe after some dump or some strong spike happened. It can reveal the power, and especially compared to before. If the power of social impact increasing, okay, the trend is not over. And as you showed in the beginning, when we see the decreasing impact of dip buying the dip, this is always a good sign. As in the previous dip, it was almost double what we saw 1 week ago. So it's a very encouraging sign. It's less people interested in buying the dips, or they're discussing other things. They're discussing now macroeconomic challenges and problems. We're not discussing how to buy the dips. I know, not as much as before. Now the narrative changed and market likes it.
Exactly, yeah. And that combined with just less people overall talking about crypto, it's a recipe for success in most cases. So we're not calling the bottom by any means, like I said, not investment advice, but based on historical data in the past, these types of setups are more prone to a continued recovery than it is to a drop. All right, why don't we move on to some main metrics here so we can look at what's going on behind the curtains for Bitcoin right now. And we'll check out a little for Ethereum too. I wanted to make sure to do some Ethereum analysis. So beginning with Bitcoin, looking at circulation, continuing to move in the right direction. We go to the last year for context. Check out where circulation was back in late August and where it is now. It's clearly moving up for a sustained period of time, and we are at the highest 30-day average for circulation since going back to January of 2021. So we're pretty much at a 1.5 year high for circulation, the amount of unique Bitcoin moving on the network. Very good sign. We had a notably high, one of the top in the last 5 years or so, I believe. It may not show because we're so zoomed out, but I believe this is one of the best circulation days that we had back here on the 13th ever for Bitcoin. It was absolutely massive on the dip here as people were trying to either buy the dip or panic sell. Likely more panic selling than the former, but regardless, the overall amount of circulation going up is a good thing. So even with less people talking about crypto, there's certainly no shortage of unique Bitcoin moving around on the network right now. To back that up, we can look at our model and see that it's continuing to paint a bullish divergence with circulation moving slightly up and price going down. That's a very deadly, in a positive way, a deadly signal that can be foreshadowing something good happening on the network. And now, while we're here, we can also look at Ethereum and see a similar case. It was semi-bullish last month, and it's bullish now, whether it's due to prices moving down and circulation staying flat, or prices moving down and circulation actually moving up in tandem. That's a very good sign for Ethereum after going through a pretty long stretch of semi-bearish and bearish divergences here, which likely was why when prices suddenly started to collapse, they collapsed very hard, much more hard than Bitcoin, which is usually the case. Let me just check while we're here. I'll check Ethereum really quick and see how it looks in comparison. Yeah, so it's a very similar sign. It was a little more flat here the first part of the year, but it started to really rise in early May on that initial drop from last FOMC interest rate rise. So yeah, we'll cover more of Ethereum in a moment, but we will continue on with Bitcoin in the meantime. Daily active addresses not looking nearly as good. So for everything we just said about circulation continuing to rise, the opposite can be said about daily active addresses, which was averaging just under 1 million around the all-time high levels. And now it's down to an average of 880,000 or so. So we're talking about give or take about a 10%, maybe even 12% drop in daily active addresses over the past 7 months. This is going to be more correlated to the actual distinct amount of people in crypto. And we saw on social trends that the social volume overall is down. And that would imply that there are less overall participants transacting. And daily active addresses will back that up a lot more than circulation, because you can still see a small amount of traders push more and more circulation up, whereas you need a large amount of traders to justify daily active addresses going up, and it has not been. So we have one not so great sign and one really great sign on the utility end right now, which overall might mean a slightly bullish divergence right now between the two main utility metrics here. All right, let's zoom in again and look at MVRV, one of our most popular metrics here, which will give us context as to how much pain traders are in. And we see that they are in a lot less pain than they were a week ago. The average trading returns over the past 30 days is still about negative 9.5%, meaning there is less risk than usual that prices can rise and should rise, but it doesn't mean that it's going to continue rallying up until the MVRV gets to 0% or above. We've seen plenty of fake outs. You know, we've seen back in late January a big push, and then suddenly MVRV goes back down. It's happened many times. Here in May, we saw it go above the danger zone line or opportunity zone line and then fall right back and go even lower. We saw even recently, June, we went above that opportunity zone line and then immediately fell back lower. So it happens many times, but in a vacuum, all things considered, when we're in a negative territory here, it means there's a better than average chance that prices can rise to get average trading returns back to that resting position of 0%, which MVRV for all time frames rest on. All right, and sentiment. So this is a very important one. We just talked a lot about social volume and the various ways in which people are mentioning crypto, both positively and negatively. Now we can look according to our algorithm as to what is going on in terms of overall positivity and overall negativity from all the commentary that is happening on Twitter, Reddit, Telegram, Discord, and a few pro traders chats. And we saw that last week actually ended right above neutral. I mean, more or less precisely neutral, but it was our first just barely positive week since late April, because obviously in early May, we had the huge drop off that soured people's moods substantially. We got down here in early May to extremely negative levels. This was like the most negative we had seen since Black Thursday in 2020. And then prices continued to drop. Everything stayed negative. And right at the tail end of this week, you can see we were right about at a bottom. As of now, it looks like there's a lot of doubt going into this first few days of the week here in June. And that's a good sign. It supports Maxim and I's theories that people are in disbelief and not really a proponent of this rally right now, which is encouraging and can foreshadow a continued rally until the crowd starts to get on board and believe it. So weighted sentiment is looking very good right now. I'll skip down really quick so we can look at social volume and dominance to round out the other sentiment metrics. We saw this one big spike here on the 18th. This was right at the bottom. This was social dominance hitting about 29%, which was the highest of 2022. And it occurred on the day of the local bottom. And that is very normal. We'll see the high spikes happen when the crowd is capitulating or when they're absolutely euphoric about an asset. And for Bitcoin, we'll see these more when the crowd is dropping out and saying, all right, I've had enough pain, I'm getting out of here. And as soon as they did, prices began to rally. Dominance is coming down a little bit, which makes sense because altcoins are really starting to make some bigger noise, especially compared to Bitcoin. And until that changes, I would be a little weary while it's under 20%. So right about there. So dominance had been above this line since the 12th and ended yesterday. So on a short day that is incomplete right now, it's below 20%. I would like to see it stay above that number. If it doesn't, just be a little bit more nervous as people start to get a little greedy with altcoins and the coins that are giving bigger returns right now. We want people to stay focused on the #1 market cap asset while having doubt in the markets, right? That's the ideal setup for us. So we're close to the ideal setup, and dominance is still pretty high. It's nothing like it was back in mid-March, but we want Bitcoin to still be the talk of the town rather than, you know, Dogecoin and some of the meme coins out there. All right, moving back up a little. Let's take a look at supply and exchanges really quick, see what's been going on. I'm going to zoom out to the last year. And it appears that we are staying low. We had a huge drop in supply about a week ago, which was very good to see. It meant that people were pretty much just going to down the hatches and say, I'm going to stay content with my holdings, and if it continues to go down, so be it. And it's been staying low ever since. Supply and exchanges is at about 9.3%. This was dating back. It's the lowest we've seen in quite a while. Click. It's being a little weird there. There we go. 2018. So we have to go all the way back to November 2018, the last time we got this low, when we had that huge rise in supply and exchanges over the course of a week. So very good to see there. And we might even start to, you know, if this trend continues, we could be going down to the 6.5% range, which we hadn't seen since going back to August, September, October of 2018. So as long as supply keeps moving away from exchanges instead of onto them, there will be less risk of future sell-offs the lower it goes. All right, heading back to just the last 6 months, let's take a look at how whales are doing right now. I'm going to add we'll look at all three together. So the 100 to 1,000 tier, 1,000 to 10,000 tier, and 10,000 to 100,000 Bitcoin tier all together. And yeah, so we're seeing a tale of three different tiers right now, where the pink line appears to be the closest to what the rally actually has shown, and that's the 100 to 1,000 Bitcoin tier that currently hold about just a little over 20% of the supply right now. So they bottomed out and began to accumulate 2 days before the bottom and have been climbing ever since. Meanwhile, the 1,000 to 10,000 coin addresses, which are more comprised of exchange addresses, they're continuing to move down, and they're at a low. They haven't been this low since going back to April of 2020. So about a 14-month low for that tier. And then the pink line, the yellow line, they're similarly beginning to accumulate. They've been accumulating since late January, really. But remember that this is going to be very, very largely comprised of exchange addresses. So we have to take this tier with a grain of salt. There's still going to be a few active traders in here, and they own about 11.3% of the supply. But I would advise that the pink and the red lines are the ones to pay the most attention to. And you have, as we zoom in here, we have the pink line going up and the red line moving down right now. So it's kind of a wash at the moment, but at least they aren't collectively going down together anymore. And that supports this rally a little bit. It's also probably worth checking out Tether while we're looking at whales before we move on. So for a while, Tether was obviously moving down due to a lot of the FUD that everybody was feeling related to it after UST had that big drop and decoupling. Tether, of course, decoupled itself and went down to 95 cents for a couple days, and that freaked a lot of people out. That has ended, and Tether is more or less back at $1 at 0.999282. So things have mellowed out a little bit, but nevertheless, you'll see that the supply and exchanges, as I go to the key ones here, I'll do 100 to 100K to a million and a million to 10 million. The key addresses are still way down for Tether. And you can see like they're still moving down. The red line, million to $10 million addresses are very, very low, the lowest of the year by far. And the pink line is right there with it. So combined, I mean, they were holding 13 and 21.9% respectively about a month and a half ago, and now they're at 10 and 18, 10.7 and 18.1. That's a major drop, and it means there's not a lot of faith there. So you might say, oh man, there's not nearly as much buying power as we would want to see amongst the stablecoin whales. Well, luckily, the Tether addresses haven't been simply moving off of crypto overall. They've simply been moving most into other stable coins like USDC here. So if we look at the same chart, boom, they're continuing to move up with both the 100K to 1 million and 1 million to $10 million addresses continuing to rise in the right direction. And if we zoom out, back to 2019, yeah, so there's a long way to go to get back to where the USDC addresses were initially. This was close to when they first, I think 2019 or late 2018 is when it first started to trade regularly. But this is a huge, huge rise in USDC. And it points to the confidence people have in the stablecoin and the fact that there is a rising amount of buying power, as people might be, people with a large amount of money are moving their money back into stablecoins for the purpose of eventually buying more crypto once they feel confident that the bear market may be done. Doesn't mean this is a sign that the bear market's done, but it means there's a lot of speculation behind the scenes that their dollars are about to be put to good work. All right, let's head to Bitcoin once again. And we'll take a look at exchange flow balance over the past 6 months. We've seen a huge amount of volatility in coins moving up and down into exchanges and out of exchanges. It's settled down a bit over the past week here after these huge outflow spikes. These make sense because we obviously saw that supply and exchanges continues to move down right now. But overall, it looks like still a pretty topsy-turvy inflow, outflow, inflow kind of pattern that we're seeing. I'd have imagined that it's eventually going to break toward one side again soon. And based on this trajectory, it seems like more outflow than inflow is going to continue to be the trend. So not much else to say there other than look for huge inflow spikes like this as a sign that we could see another big drop. Network realized profit loss, not much to say. It's pretty much even now after we saw these enormous loss spikes. This was like one of the biggest of all time here. And it eventually evened out, and all of these outflow or loss spikes signaled the bottom, and we have seen less and less losses ever since. So people are still taking their coins out on this small rise while at a loss overall on the network, which is a good sign. What we don't want to see are, clumps of these types of positive spikes, which would indicate a local top in price. Development activity, nothing much to say. It looks fine. We touched on social volume and dominance. Age consumed, doesn't look like there's a lot of dormant coin movement right now. Ratio of daily on-chain transaction volume and profit to loss. I'll touch on that in just a moment. Whale transaction count back to neutral. It looks like the whales, at least for now, are sitting tight and letting the price play out. And now I will jump over to the ratio of profit to loss template that I have. And this will show us both Bitcoin and Ethereum at the same time. Blue is Bitcoin, reddish pink is Ethereum. We see that the past couple weeks, we were seeing a lot of transactions happening in loss territory compared to profit. And that's generally a good sign and more indicative of an eventual bottom like we saw back here and like we saw here. And now we're actually seeing pretty big spikes in positive territory. Ethereum, at least so far on this short week, is seeing the highest ratio of profit versus loss since late March. So that's pretty telling, and you might want to be a little weary of such a high amount of profit right now, because that can signal that a cool down is coming. It doesn't mean that we're about to see a local top with Ethereum back over 1,200 temporarily, but it does mean that you need to be a little cautious with people beginning to see some positive returns here. For Bitcoin, it's a little more neutral. They are in positive territory as well, but nothing extreme by any means. It's pretty much matching what we saw in mid-April at the moment, but nothing high like we saw in late May, late March, or early February. So overall, pretty good there, more or less a neutral sign. I'm going to jump over to Ethereum, and maybe in about 5 to 7 minutes or so, we can look at a few altcoin requests, if that sounds good to you, Balresh. Drop your questions, guys. Let us know what altcoins you'd like to take a look at, and we'll be happy to go over them, even if it's not an ERC20. Okay, so we touched on circulation, moving in the right direction right now. Daily active addresses, just like Bitcoin, not so much. In fact, this is a much bigger plummet than Bitcoin. If we go to the last year, daily active addresses are at a year low, at least on the 30-day time scale right now. And they look like they're actually at their lowest average since around probably November or December or so. Yeah, December 2020. So 1.5 year low in daily active addresses for Ethereum. It doesn't look like there are nearly as many participants after the huge plummet where, we almost saw 5,000. We got to 800 something at one point. So that was about an 80% plus drop in price. And not surprisingly, there are less participants in the Ethereum network at this time. Not necessarily a bad thing, but overall in a vacuum, we'd like to see both circulation and daily active addresses moving up. Right now, the only one that looks encouraging is circulation. MVRV, let's mark the negative 15% mark for 30-day MVRV, which will be about there. We'll screen that. And we did just jump back above the opportunity zone. So this is where it gets really juicy for adding onto your positions. And we're now above there, but we are still way below 0%. So all things considered, this is a less risky time to be in Ethereum compared to usual based on trading returns being so low. Weighted sentiment, mildly negative still. We haven't seen that positive uptick like we saw in Bitcoin. So that works slightly in Ethereum's favor, considering this is the fifth week. Actually, this is the very start of a 6th week of negative weighted sentiment thus far. We much rather would see this than huge positive spikes where everyone is feeling like the bottom just happened. So people don't really believe that the bottom has just happened yet. Supply and exchanges, interestingly, it started to move up ever since late April. The supply and exchanges is up to about 13.7%. It was on a huge downswing for pretty much the last couple of years before it started to see a change here in mid to late April, likely related to price is really starting to fall down and continuing to fall down ever since, other than this very, very short-term rally we've seen over the past week. So bit of a concern there. It does look like that might mean there's more plans of a possible sell-off, but not a major one, right? Context-wise, we're still way, way below where we were 2 years ago in terms of the ratio of supply when we were at around 26.5% back in June of 2020, and now we're at 13.7. So it's all relative. Whales, I've told you guys before that it's always a bit of a challenge to navigate which tier to really follow for alpha on the Ethereum side, but I've always liked looking at anywhere between 100 to 1,000, 1,000 to 10,000, and 10,000 to 100,000 Ethereum addresses, with the most important being probably the smaller ones. So if we look at this over the last 2 years, the pink line, 100 to 1,000 Ethereum addresses, they started to accumulate all the way back in late February, and they've been moving up ever since. But the red line, 1,000 to 10,000, is moving downward since late 2021. So that kind of counters it out. We can also see the really large addresses that are comprised mostly of exchange addresses. They were moving down throughout pretty much about a month and a half prior to the Ethereum all-time high that occurred in early November. They've kind of wavered a bit here, and ever since mid-March, it's actually looked okay. They had some accumulation here, did drop going into June, and are now on the upswing once again alongside the 100 to 1,000 coin addresses. So overall, kind of a neutral sign. We'd like to see the 1,000 to 10,000 tier really kick it into gear, but so far it doesn't look like they're doing so. Perfect. Yeah, give me about 1 to 2 more minutes, and then we'll take those coins and start to analyze them. Exchange flow balance, pretty neutral right now. Network realized profit loss. Interestingly, we're still seeing some pretty negative spikes as of today. Let me zoom in just a tiny bit. Yeah, so this was yesterday, I should say, a pretty big loss spike. So there were a lot of people that just capitulated and said, all right, this little rebound to 1,100, 1,150 is good enough for me. I'm going to get out. And that's good. We want to see people selling while they're at a loss, because that tends to propel prices upward. Development activity looking fine, nothing special there. Social dominance is down a bit. It's kind of in the mid-range for what we've seen over the past 6 months. So overall, nothing too special to report ever since we saw some pretty high mentions of it last about 2 weeks ago. Age consumed, pretty dormant at the moment. We touched on transaction volume and profit to loss. It's starting to look a little positive, so be aware of that. Whale transactions are mostly back to normal. We saw, just like with Bitcoin 2 weeks ago, tons and tons of huge transactions pouring in, and that was very close to the bottom. So that could have been a good sign of whales accumulating. Even if we don't have a particular tier we can look at for Ethereum, we can always see when they're 100K plus or even 1 million plus, which I won't show today, transactions firing off at a high degree, like they were 2 weeks ago and are pretty much back to neutral now. All right, so why don't we look at a few assets for 15 to 20 minutes based on the community's recommendations, and then we will wrap up this call.
Okay, let's start with helium, HNT. And then for the next one, Chat agreed that it would be interesting to take a look at stablecoins, so maybe a comparison of USDT and USDC, since they're kind of changing.
Yeah, that's a great idea.
In market share.
So we'll check out HNT first. For those of you who don't know, we have ERC20 data for circulation, daily active addresses, MVRV, many other metrics. And because helium is not an ERC20, we're going to be limited with what we can analyze. And it's mostly going to be on the social end And what we can see here is mostly continued negative weighted sentiment. It doesn't look like people are paying too much attention to helium at the moment. It's probably, when you see consistent, like slightly negative, it usually just means there's not a lot of commentary at all. And the reason it's negative is likely due to just the lack of discussion relating to this asset. So it's pretty much just under the radar right now. It's been rising ever since late May here, so that's a very good sign. Its local bottom hit about 2 weeks before Bitcoin and Ethereum. So yeah, weighted sentiment shows not many people paying attention, which is generally a good sign. We should have volume and dominance here. We can take a look at. So this is very interesting. Helium was not really talked about much at all throughout late 2021 and all the way up until April of 2022. And then when the second week of April hit, we started to see an explosion of dominance. It's still relatively small. If you look at the top left of my screen, we're talking about 0.2 to 0.3% of all discussions, but that's at least a huge uptick compared to what we were seeing. So there is some increased discussion related to it ever since April, but that said, it is declining a little bit. This pink line, if I were to put a 30-day moving average on it, so this is the average social dominance over time, it is moving down once again, but still way higher than what it was prior to it making headlines for whatever reason in April. Some of you may have more expertise on what it was that really caused that dominance spike, but it does appear to still have put helium in the spotlight more than it used to be. Just looking back historically. So yeah, going back to mid to late 2021, there were a lot more social dominance spikes, but not nearly at the consistency that we're seeing now. Generally speaking, you want to avoid, if helium is starting to see a breakout and moving in its own direction away from the rest of the markets, and you suddenly see a dominant spike, that would usually be a sign of a local top if prices are moving up, or a local bottom if prices are moving down. Right now, it just looks like overall it's being discussed more regardless of its price performance. So as far as alpha, not much to take away from that, other than it does show that there is more crowd discovery toward the asset. But as we saw from weighted sentiment, there's still probably just not much opinion on it, positive or negative. Okay, and then finally, we'll take a look at development activity for helium. Doesn't look like we have anything. Yeah, so unfortunately, it doesn't look like we have a GitHub linked up to helium. But it's possible we can look into this, so maybe we can make a note of this one, Balresh, to check with the devs to see if we could get some development activity metrics up. That said, why don't we scoot over to some stablecoin analysis now? I'll bring up Tether here, and what we can do is compare it to USDC and perhaps something like DAI as well, and we'll have all three of those that we can check out together. I would say UST, but UST is now USTC, and it's kind of a dead coin. So circulation for USDC, just type it in here. Shared access. So yeah, it's kind of interesting. We saw a much bigger spike in circulation for USDC compared to Tether here on the 12th and 13th before it dropped down. They're pretty similar at the moment. So you might think that Tether's circulation would be moving down far faster, but that's not really the case. It looks like things have mostly normalized for Tether after that big depegging here. And because of that, both are kind of being used at their normal rates at the moment, with Tether still having a little more inconsistency, probably from the lack of whale holdings in it compared to a couple months ago. On the daily active address side, I'll add it in here. So shared access, it looks like Tether is still seeing more daily active addresses, but I would say, yeah, USDC is definitely creeping up on it. It got close back a couple of weeks ago, and it now is staying a little behind Tether. If I look at the 30-day indicators for both, yeah, so I mean, check that out. The yellow line is USDC, and the red line is Tether. USDC is sneaking up on it a little bit. It's moving, especially right here. It started to move up as Tether began to move down in mid-May. And I wouldn't be surprised if there's an eventual connection between the two and USDC starts to be used more than USDT. But for now, Tether is still the dominant active address coin with about 18,000 active addresses more on a daily basis than USDC. We'll skip over MVRV. Weighted sentiment matters for sure. We're seeing that so far in the early week, there's more negative commentary toward Tether than usual. And it's interesting to see, despite all of the infamy that Tether was experiencing the last few months, the weighted sentiment was actually high, likely because there was just such a large amount of social volume related to it to counterbalance the fact that there was more negativity than usual. But nevertheless, it does look like we're back in negative sentiment for the first time since mid-March. We'll see if it holds as the week progresses here. I'm curious on the USDC side too, what's going on. And I haven't forgotten about DAI, guys. I'll still bring up DAI when we look at whales. So on a shared axis, yeah, USDC is more or less neutral right now, not nearly seeing the volatile sentiment fluctuations that we were seeing with Tether. Supply and exchanges is a very telling one. So I'll get both USDC and DAI up here. Okay, so we've got all three coins, put them on a shared axis, full screen that. And yeah, so Tether is clearly the coin that's been moving aggressively onto exchanges, now up to about 38.5%. It did get to above 38.5% just a few days ago and is now approaching that number once again. I wouldn't be surprised if it passes it in the next couple days. That could be both a good and a bad thing, though, for Tether. You may think that it's due to people wanting to get out of Tether because they're continuing to distrust it. And I'm sure there's a little bit of that going on, but it also means there's a lot of dormant Tether that is now moving to exchanges for the purpose of buying. And that would be a very good thing. So really what we can do is compare how much of the three stablecoins are moving on to exchanges. And it looks like DAI and Tether are moving on, and USDC is actually moving back off as of the last couple of weeks. But overall, if you combine these percentages together, I'll do a quick little math session here. 38.5 plus 8.9 plus 7. We're talking about 45.5, 54, just under 54% of these three stable coins are on exchanges right now, with a possibility of 300% total. If we looked at early May here, just about 6 weeks ago, the total number was 30 and a half plus 36. So a little over 37%. So we're talking about like a 15% rise in the cumulative supply and exchanges over the past 6 weeks. That's pretty massive and is usually a good thing when it comes to stable coins, because that means the opposite of what it would mean for assets, where it can imply a big sell-off is coming. This means it could imply a big buy session is coming where they purchase a lot of crypto. So keep that in mind. I'd say this is a very good signal here. Now, as far as whales go, why don't we do it? We'll do it one at a time. I'm going to highlight 100K to 10 million coin addresses, beginning with Tether. And as you would expect, the amount of whales are moving off very quickly, now down to 28.8% after being as high as 34.7 just about 6 weeks ago. We'll take a look at USDC next. The exact opposite. It's continuing to move up as more and more 100K to 10 million addresses are accumulating USDC. That's a great sign to see after being at 22.1% at the bottom about 4 months ago. They have gone just about 50% higher in terms of their bags. And that's a massive improvement in the buying power of key stakeholders that hold a lot of dollars. So USDC is looking excellent. And then DAI, which is more correlated with Ethereum, we found for DeFi purposes. But as far as the whales for DAI, they had their big uptick during the exodus of Tether in early May. And unlike USDC, it isn't continuing to rise. It's more or less staying flat around 31, anywhere between 31 to 33% over the past 6 weeks or so, which is still fine. It means that the buying power is staying up high. And if you see that continue to improve, that could be a very good sign for Ethereum and ERC20s in particular. All right, and now I'll go back to Tether. Let's take a look at a few more. Exchange flow balance, very relevant. It's mostly inflows, as you would expect, since we looked at supply and exchanges, and it was a constantly increasing line. So yeah, that's good to see. I see that we had one outflow day here on the 22nd, but other than that, it's almost all inflows. Network realized profit, not loss, not too relevant for Tether. Development activity, not too relevant. Social dominance, we touched on that. Looks similar to weighted sentiment, where it's kind of a constant up and down. We were seeing mostly positive sentiment during this stretch, if you remember, which was interesting because there was so much controversy going on with Tether. But nevertheless, it looks like the discussions related to it have died down pretty substantially now. Age consumed, we did see a ton of dormant movement here on the 20th at the beginning of this week. I'm curious as to what caused that. In fact, let me put on mean dollar invested age for Tether. So yeah, this is interesting. Any downtick in mean dollar invested age means that there is a large amount of older addresses that are now moving their coins. And that usually, if it's a traditional asset, it can mean that prices will go up, or it's instigating a bull run in the near future. But right now, it looks like we had a huge downtick during the depegging, which interestingly, guys, a lot of people seem to know about prior to the depegging. And then it moved up for a while as things started to become stable, pun intended, and then started to move down again ever since June 12th. So the last couple of weeks, the dormant coins are starting to move again, and mean dollar invested age is low. It's as low as it was in early April or so. So we're looking at almost a 3-month low. That's a very good sign for Tether. Let's take a look at USDC for comparison. Pretty similar. The line started to really move down in early May, starting to move back up again, but we've definitely seen some increase in dormant movement over the last couple months. And we'll do a quick DAI check. Getting choppy, probably because I have so many charts on here. So DAI has actually shown quite a ton of dormant movement going back to very early April, and it's continuing to move down. So of the three, DAI looks the best in terms of dormant movement, and could be a good sign for Ethereum and ERC20 holders. All right, and I will cap this off by looking at whale transactions really quick. Let's just go to the top. We'll just look at 100K plus, see how many $100,000 or more transactions have been made on the DAI network. It looks like we had a spike about 2 weeks ago, another mini one about 5 days ago last weekend, and now it's back to neutral. If you look at USDC, almost identical, not much to say there. And Tether, almost identical once again. So it looks like most of the hoopla and noise from the last couple months has died down, and whales are content with sticking with the stable coins that they own now. So there's still a mass exodus that looks to be concluding for Tether on the whale side, but there's at least not a huge amount of transactions happening on a daily basis like we saw in mid-May especially, and about 2 weeks ago. I didn't know this, but there was kind of like a very mild depegging once again 2 weeks ago, where it was starting to go down to like 0.997, which is pretty significant when people have millions of dollars of a coin that's supposed to always stay at $1. But it does look like that caused a little bit of noise, and then things have stabilized out as of now. So yeah, hopefully that was a helpful analysis to look at 3 of the top stable coins and what they're doing right now. Really good suggestion. We don't usually get a question for stable coins, but I like looking through that with you guys. If there are any other questions that pop up related to the markets and what we're seeing and what you're seeing, we're more than happy to have some discussions with you. So make sure to let us know what you're seeing and want to talk about in the general channel on our Discord. Stay safe as always. On behalf of Maxim here, thank you so much for joining. I want to thank you all for being a part of the call, and enjoy your weekends. Talk to you soon.
Thanks, Brian, for running it. Talk to you next
Bye, guys.
week. Yeah, bye-bye.